Did you know that the market cap of stablecoins has soared past $137 billion? In just a few short years, stablecoins have evolved from niche assets to major players in finance. Today, we'll explore stablecoins, digital currencies designed to offer the benefits of crypto with the stability of traditional money. Are we on the brink of a future where stablecoins could replace currencies like the US dollar? Let's discover more. First up is the question of trust. Traditional currencies like the dollar have faced serious challenges, especially with inflation hitting over 9% in 2022. Stablecoins, on the other hand, promise low volatility and easy transferability without needing a central bank. Would you rather hold a dollar that depreciates, or a digital dollar linked to real assets and instantly usable worldwide? Now let's break down what stablecoins really are. Stablecoins are cryptocurrencies tied to stable assets like the US dollar or gold. There are three primary types: fiat collateralized like USDC and Tether, USDT, backed 1-1 by cash reserves. Crypto collateralized like DAI, secured by other cryptocurrencies but over-collateralized to manage price swings. Then there are algorithmic stablecoins, which use smart contracts to balance supply and demand but carry higher risks. These digital currencies harness blockchain technology's speed and transparency while aiming for price stability. Adoption is rapidly expanding beyond tech enthusiasts. Major companies like Shopify are enabling merchants to accept stablecoin payments. Visa is experimenting with USDC, and apps like Venmo and PayPal are adding stablecoin features. In a recent Federal Reserve survey, nearly 30% of U.S. adults showed interest in using stablecoins. That's not just a trend, it's becoming mainstream. So what does this all mean for the future? If stablecoins keep gaining momentum, they might transform the financial system. Imagine payrolls, remittances, and purchases seamlessly made through stablecoins, quickly, with low fees and less bureaucracy. However, it's essential to consider the risks involved. Regulatory uncertainty, reserve transparency issues, and algorithmic vulnerabilities are real concerns. Governments are taking notice. U.S. regulators are working on frameworks to mitigate any systemic risks that stablecoins might pose. In summary, stablecoins present a compelling blend of stability and innovation. While they may not fully replace traditional currencies soon, their growing presence in the economy is undeniable. The key question remains: how significant will their role be in our financial future? What are your thoughts? Are we on the verge of entering the age of stablecoins? Join me in the next exploration of digital finance trends.